Hello and welcome to a special episode of Profiles in Risk. Today we have David Fontain, CEO of Foresight, who we've had on the podcast before. And today is a bit of a different episode, a bit of a shorter episode and a bit of a different episode. So we are recording Wednesday, October 12th, and this one will go live really quickly. So David, thank you for joining today. And basically, for the listeners, what we're doing today is a candid conversation with David about some changes that have recently happened at Foresight that have been in the trade news. So David, the floor is yours.
Yeah, hey Tony, great to be here. Thanks for having me.
On the news recently, we heard about a downsizing at Foresight, significant size, and it was at the beginning reported to be bigger than it really was, and it created some confusion in the market. So why the recalibration at Foresight?
Yeah, great question, Tony. And as a technology-enabled insurer, we always need to seek ways to improve our efficiency and our ability to serve brokers, our customers, and the workers' comp market as a whole. So to accomplish this, we announced some changes in the business that reflect changes in our underwriting process, where we're streamlining our distribution model. Really, some examples of this. The biggest changes we made are a move to a single point of contact for our brokers and clients that reduces handoffs and referrals. So previously, we had multiple different ways that brokers and clients could interface with Foresight, and as part of an ongoing endeavor to streamline things and be as efficient as we can be, we consolidated both our business development team and our underwriting team into more of a business development underwriting team. We're calling them production underwriting team is the name for it, and they're going to serve as the single point of contact for everyone, brokers and clients, moving forward. Which is streamlining a lot of the interaction, as you can imagine, here at Foresight as we continue to grow rapidly. The other big change is we rolled out the second phase of our underwriting and quoting platform, which allows for expedited turnaround of quotes from brokers. Previously, we were turning quotes around. I would say, in the sort of best, I would say, some of the top turnaround times in the market, but we're obviously always looking to get as fast as we can and leverage technology. And the way that we were processing things previously, it required a little bit of manual input, and that required some headcount. We had a whole administration team on the underwriting side that was assisting in that process. With this new phase of technology, which we've just launched this month on 10/1, we are able to now process quotes with less manual handling, and I'm a lot more streamlined. And this is actually a first for the middle market. Full digitized quoting with predictive indications has been in the SMB space for some time, and that's generally, I would say, that's that market. Bit of an easier lift to accomplish that from a technology standpoint. When you think about a small business, it's fairly simple to quote when you compare it to a middle market company in one of the hazard class code 7, or something that's a bit more technical to underwrite, like where we operate. And so it is certainly, for us, it's the first to bring this technology in terms of streamlining quoting for the middle market. But unfortunately, what happened as a result of that, it required us to have less headcount and less people manually processing things. So that contributed to part of the layoffs that we made last week. So that was an unfortunate result, and that sort of byproduct of releasing that technology. But for Foresight, in terms of what we're doing moving forward, really, we're looking for us to be a true technology-enabled insurance company. We have to leverage technology to be as efficient as we can at every point in the business. And so it should set us up for 2023 to be a lot more streamlined and a lot more, a lot of great things to come.
Okay, I like a lot of what you said. The single point of contact That is customer service wise, absolutely fantastic. Um, I've always been a fan of the production underwriting model. It has its things that are tricky because you're asking an underwriter to both be analytical and salesy, but it's the direction the industry is going in, and it does make a lot of sense. The new uh, platform sounds very exciting, and especially the a completely digital quoting for middle market. Uh, that's very cool. Middle market historically has required weeks, right? Days if you're lucky, and you're the biggest broker that this underwriter is working with, but usually weeks. So that's great. Um,
Yeah, we effectively, we were turning things around in 5 days. Average was 3 to 5 days prior. Now we're hoping to get things sub 3 days with this new technology in place. So I think we're excited. 2023 we're gearing up for a massive 2023 in the back of these improvements.
okay. Um, so since this recalibration did lead to some people being affected, some downsizings, uh, but more because of a change of the required skill sets. Is Foresight hiring?
Yeah, so as you know, being so close to the talent in the recruitment world, it's such a difficult decision, and it's difficult for everybody involved. And we made the decision to reduce 40 roles at the company, and it was not done lightly. It was done, on the back of lots of painstaking planning and trying to figure out if we can reskill people and put them in different areas of the business. But for us being, we're a high growth company, and if you compare it, we're a lot smaller if you compare us to an insurance incumbent that we compete against. And so we have to really pick our strengths and our battles wisely. And so that decision of downsizing wasn't, was a lot of care was taken into that, and a lot of preparation. So it's hard to, we offered a lot of support and transition services to everyone that was impacted. So it hasn't been easy to say goodbye to those colleagues. But if for us to pursue this streamlined service model, it requires fewer people, unfortunately. And so I would say that, to answer your question, there was the headcount reduction was largely associated with this recalibration that, in terms of continue to deliver technology to improve efficiency and looking to consolidate things and make things more streamlined for our brokers. So, it did require a lot of planning, and it really, it's tough to do, unfortunately. And, but we did everything here at Foresight to make sure that those people are looked after, and, we provide as much transition services and care as we can.
Okay. And for any affected who are listening, or any affected by any of the other recent downsizings at other insurance, we've had quite a few this year. We're here to help. Grab time and chat with Tony.com. And the insurtech talent market right now is interesting. It's kind of bimodal. Some are downsizing, whether it's to extend runway, or because they need a different skill set than they had as the product matures. But many are hiring, so there's a lot of work. So please do reach out, and let's find you the right next role. Hold on, let me get back to it. Okay. So both you and I were just at ITC. There's been many people have posted, their impressions from ITC. So I'm curious about your impressions coming back from ITC. What's your take on the health of the insurtech market, and especially when it comes to the investors, because it definitely seems like it's gotten a lot harder than a year ago to raise money for an insurtech.
Yeah, I would say first off, it was awesome to see so many people at ITC. Like, it felt like it was truly back from post-COVID. And it actually reminded me a lot of IPC going back 2018, 2017, when things were in full swing. So it was just awesome to see so many familiar faces, yours included. Obviously, can't miss the top hat there at IPC. Fantastic, it's one of those awesome things to spot in the crowd. But yeah, it was great to see a lot of people back in action. We actually had a lot of positive calls with a lot of high level investors. I feel like there's certainly still interest in the insurtech space, and in terms of investment. I think it's just become more refined. Like the old model where it was basically growth at all costs that a lot of the early insurtechs were pursuing, backed by massive amounts of capital. I don't think it's sustainable anymore. And so I think investors have become a lot more astute and really understanding that insurance companies are valuable when they make money and they're profitable, and they've got things like a low combined ratio. And I think the true value of insurtech and the true nature of insurtech, which we'll see moving ahead, will be insurance companies which use technology to achieve this, to become more profitable than an incumbent, to have a lower loss ratio than an incumbent. If you're able to do that and make a better insurance company that's just not a better marketing machine, but actually impact the key drivers, the key metrics that make a good insurance company, you're going to get investor interest. You're going to drive value because what you're making is inherently valuable. Insurance companies always will be and have been, valuable items. They've been very. There's a reason why Warren Buffett loves insurance, right? And always has. They're incredibly valuable and they've got long-lasting power. And so, I guess the message, to speak to the investment piece. And if you're a founder right now, if you're starting an insurtech, or maybe you've just started one, I wouldn't say stop what you're doing because investors aren't interested. They're super interested. It's just, are you creating value in the right way, in line with how the market's changing? So we saw, and we feel we are at Foresight. Everything we're doing with our technology from day one hasn't been to create a better marketing mousetrap. It's been to improve the quality of the risks that we underwrite and help companies lower their loss ratios and reduce claims, and thereby, for us, preventing workers getting injured. And so we feel that's our model. We feel is more future facing in terms of using technology to create a better outcome for everybody, and create a better insurance company.
Perfect. Makes perfect sense, and I agree completely. The model of, hey, money and reinsurance are both cheap, and investors are looking at us as technology companies with lots of growth. That a few of the early insurtechs that IPO took doesn't make that much sense, and especially now with money not being as cheap as it used to be, and with reinsurance being harder to get. But I agree with you completely. The Warren Buffett model makes sense. Long-term creation of value for both the client and the investor, all while treating the employee well. It's a winning combination that the industry will continue to have. So
yeah, agreed. I think, and I think with a lot of those first wave of insurtechs, a lot of it was like trying to take an insurance business and turn it into a SaaS business, and you're taking a round peg and you're trying to fit it in a square hole. And it's arguable, you can make some comparisons there in terms of growth rate and, ARR and things like that, cost of acquisition, like things you can make comparisons, but at the end of the day, an insurance company is an insurance company. You're either taking risk or you're not. And if you are taking risks, then you really have to be doing something to impact the loss ratio. Otherwise, your outcome is going to be just the same as any incumbent out there. So I think that looking to the future, companies we've seen this in the stock market. There's companies out there, small cap, mid cap insurance companies, low combined ratios, high growth, like I wouldn't say high growth rates, but good growth, and their value, the market caps just keep increasing, even post the downturn. And that just shows you that the market values good, a good insurance company.
Excellent. Thank you for joining me today for this update. Look forward to see you guys continue to grow. And again, for those affected, whether at this or at any other of the downsizes we've seen in InsurTech in the last few months, reach out. There is a ton of work in our industry. It's just a matter of finding you the right place that needs you next. So thank you very much for your time, David.
Thanks, buddy.